Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value. If you like making money, subscribe to the channel. We look at undervalued financial investments, possibilities, opportunities. We look at all that stuff. And if that interests you, click subscribe, join our community. Let's ride this bull market in commodities up together. That's mainly where I'm positioned. Now, I've just learned kind of about Elliott theory. I'm kind of diving into it. I'm going to go over some really long-term looking charts using Elliott Wave analysis. And again, I'm just learning this stuff. Don't expect this to be 100% right. I'm still probably fumbling over a couple of the rules in some of these things. So don't take this as a legit answer. Take it as me progressing and trying to show you guys what I'm seeing in the markets. This is just another perspective or outlook. Again, I'm going to go over real quick what Elliott Wave theory kind of is. What it says is that this pattern, this one on the right here that you can see, this guy right here, this Elliott Wave, there's the pattern that this thing repeats over and over and over and over, because it's human psychology or herd psychology. This pattern repeats over on every single time scale. So you could look at it from a microsecond that this would repeat, and you could look at it from a multi-century, and this pattern would repeat. So the difficult part that I am trying to look at is, where does the pattern start? Where does it end? Or does this thing repeat over and over and over and over? And when people look at this, we're looking at it from a pattern perspective. Now, patterns are it's an output from a group of people, and the people are what drive the pattern, not the pattern driving the people. So this can get it gets very difficult to understand, trying to fit what the people are doing versus the pattern. Just because a pattern may say something doesn't necessarily mean that will 100% be the outcome. At least that's how I view it. There's other things that we do on the channel in terms of ratio analysis, in terms of market conditions, and I think those are what drive people, and people are what drive the pattern. That's my viewpoint. So I'm going to show you some big patterns here, and I don't know if I have this set up right. And remember that the people are driving these patterns. It's not the other way around. So the way that this is supposedly supposed to work is, you've got that pattern. Hopefully I'm pointing to the right way. That way, yeah. That pattern, the Elliott Wave theory, that pattern, it repeats over and over. And their theory is, we want to be invested in the impulse waves, which are these waves up here. These waves going up, we want to be invested in it at that time. Really, they want you to be invested just this, you sell, just this, you sell, and just this, you sell. Then there's a big corrective phase depending on your time frame of this pullback. What I'm probably going to end up doing is that we invested here at a commodities bottom, and I'm going to ride this whole thing up. That's probably what I'm going to do, because it's not easy to identify turning points and all that stuff, because some of these things get pretty jumbled up. So I'm going to ride the whole thing. And if the valuation is good, I'm going to let it ride. That's been my viewpoint. Trying to time this stuff can get you into trouble because you drew it wrong or something happened, or I'm going to ride the whole thing. That's what I'm going to do. You guys can do what you need to do. But this is Elliott Wave. I'm going to show you what I did with gold, silver, and oil, just to show you kind of the three commodities there. So this is what I've got. This chart on the left is the gold price, 1950, 2000, and then the price. And this is a logarithmic price chart, because it's much easier to identify on a logarithmic scale. This is SM Energy's chart, just to show you one cycle of basically an Elliott Wave, and then the completion of the cycle, and then you get this nice little lead-in, which is this guy there is the lead-in, or big move higher. And I've seen that all over the place. And then in the middle here, these are what potential corrective phases could be for an ABC. So you could do an ABC like we've got here. They've got ones where the B is higher. You've got ones that are all kind of, they call it an irregular correction. Then they have another irregular correction where it's a 3-3-5 and this is a 5-3-5. So it kind of looks like this. Now, I'm looking at this on the left. And the thing, I've got these numbers here. Again, it's based off of where your time start is. You could argue that this is wave 1, corrective phase, wave 2, first wave, third wave, and then the last wave. And it would fit because this is a larger wave here than this wave here, if you're looking at it from a very large perspective, and that we are in a corrective phase of this one here, which means you go down, that's A, you go up, it's B, and then we're going to correct all the way back. But what if this phase here is not number 5, an A or B? What if this is the first move? So it's difficult because we know that gold was tied down here. What if this is first wave is actually this entire wave? This was a pause, and this wave here is the first impulse wave, and we're about to start a third leg higher. You can look at this differently and get different outcomes, and that's what's really difficult about this. The only thing I can say is that this is definitely a corrective phase in this little portion here. And you could say that this is a corrective phase in here. This is a flat correction. And this was a corrective phase in here. You could see how small this is. Now, these align with the demographics of those people back in the day. This here, we were selling homes, the housing starts were increasing, and then the housing starts declined here, and then the housing starts went way up again. This correlates with data and fundamentals that I have on the channel. Here was kind of a disinflationary period between here and here where the demographics weren't as large. So they weren't selling as many homes. Gen X was definitely not as big. They were in the home buying years here. And then this phase was an absolute bottom in gold, Dow to gold ratio. All the ratios said the metals were cheap. So this was coming up, and you could say this is a first phase move on a very big time frame. And that this correction pattern could have corrected, differently. And this was wave C is up here, and it's just going to correct back a little bit. And we're about to explode higher because we do have a cup and handle pattern. So I'm tying together a whole bunch of different patterns into a another pattern. And if you look, you could say that this pattern here is a cup, and it comes up above it, and then a handle here, which is a pullback. So this is a cup and kind of a little handle, and then we went up, and it's creating another cup and handle pattern, and that we're about to start wave 3. So this wave goes 1, 2. This is going to be a 1, 2 corrective pullback. You could say that this is A, B, and then the C was here. You could say that, depending on how you draw it. And then we're starting this. This was the first move up. So that's wave 1. We just completed wave 2, and we've got the massive wave coming. I don't know. Whoever sets this up, they're not going to know either, even if they're a 20-year pro looking at this stuff, because it all depends on where you started. So that's what's difficult, and that the rules aren't violated. In the third leg here, so this is the first, and this is the third and the fifth wave, this here is supposed to be longer. But if you're drawing it out, if you're using this real time, how do you know that this isn't the third leg? That this right here is the first leg. You come back, and then we're putting in this gigantic third, pattern here of a third leg. That very well could be, because this here looks like a lead-in, just like this here. See that? Comes up, comes back, and then it's boom up. This is the first wave. This will be the third leg. so think of the third leg as being 1, 2. This is 1, 2, and then we have a third leg that goes way up here, and then 1, 2, and then all the way to the fifth wave. You could view it as such, but that's gold. I have it written as such here, where this could be B as a large pullback. But if you look at it as wave 1, and then with the third wave, we're putting in this gigantic third wave, that's another way to view it. And I don't have the answer here. So here is gold zoomed in on. So what I did is I zoomed in on this little pullback right there at the tip. That's zoomed in, and to me, you could say this was a fifth wave coming up if you were to look at it from a different time perspective, different vantage point. You come on down, A, B, C correction. The corrective phase is done. We have this up, down period of a lead-in phase. We just did, perhaps we did, we're putting in the first move higher here. So this would suggest, if I did this time period right, that we are entering the third leg. A big move could come with gold. And does that align with the thesis on the channel? Yes, it does. It aligns because we have a demographic that's going to support higher inflationary pressures in real estate, which is the gateway to inflation. If that's the gateway to inflation, we're going to get inflation, and gold will account for that inflation. That makes sense. There are ways that you could look at this wave theory differently, though. There are, and I described that with the last picture, or last chart. Let's go and look at silver. This is silver here. So if you look through here, I did it through this, and this is, remember, different time periods, and these patterns repeat, repeat, repeat. Here's a little over 2-year look at this. You could say that this is wave 1. So 1, or I did here. This was the lead. This could potentially be the lead in here. So this lead in portion here is this guy lead in. So that's 1, 2, 3, 4 is all the way up. That's the fifth wave, but it violates it because it'd be a 1. The first wave is bigger than. So you could look at it as this. This is 1, 2, or third wave, and then you've got the A, B, C correction. I'm looking at it from a very big perspective. Don't worry about these numbers here. A, B, C correction, and then we're going to put in a big fifth wave coming up. Or you could view this as a lead-in, like this is the lead-in here. This is one wave. We've got a big corrective phase in the middle, which is this phase here. So this is from 1 to 2. And we're pulling up and putting in a wave 3 leg, which also correlates with gold from a big long-term perspective. Or this is a lead-in here down on the bottom. 1, 2, the third leg, and maybe this we're putting in, and then we're going to put in a fifth leg. That potentially could happen too. So what's the problem is with using Elliott Wave is, where do you start? Where do you end? And how do you know you're right? That's the tough part. And then I've got oil. Some of these you can really wrap your mind around these. They will mind bend you. Yeah, this one's oil right here. Yep. So this is oil to show you. I've got the S&P. Someone wrote this. They said that this is kind of the 1, 2, 1, 2, 3, 4, 5, which is 3 here in this grand super cycle. Comes down, moves C, and then it moves on up for 5 here. So this here is a cycle. I did the same cycle here with oil because it looks like it fits the pattern almost identical to it. I mean, to the T here. And so what I did is I said that this 1, 2 portion is back here somewhere, and that we were coming up. It has these long phases, like these long phases here. So this here is 1, 2. It came on up because you could see that this is a little bit higher move here. This came on up. This is 3, 4, this entire pullback there. Then it goes up even more. This is 5 because it's got that little cliff deal there. 5 is here. Then it's number 3, and we do an A, B, C correction here. This would be point number 3 and 4 would be down here. And that we're going to put in a large 5th wave. And that makes sense. Again, I'm looking at this from a logarithmic perspective. That this makes sense because if we were to put this in, the top would probably be around $300 to $500 for oil. And that makes sense because if this was 140, they've got 5 being a little bit higher than 140. So this could be $200-$300 as a top for oil. And that correlates with everything. It correlates with all the ratios. It correlates with the fundamentals. It correlates with everything that we can think. And then you're going to have, after that, a huge corrective pattern, which makes sense if we go to electric vehicles, that this thing would get sold off and potentially the demand would decline and we would see a big corrective phase for a short period of time and then recover possibly at lower levels. Again, I'm not a pro at this stuff. I haven't used it for very long. I'm trying to correlate data and get you guys a little bit different outlook on the markets. So I'm trying to fit data, see where we're at, see what the potential could be, and if the data fits a certain way, we could really do very well with our investments. I think that the fundamentals, the ratios, the market conditions, and if I tie it together with the way I did with some of these, that it makes sense. Now, I'm looking at it from a highly biased perspective, which you should be, because I'm tying in valuations. I can't fathom a gigantic pullback in uranium, and I didn't go over uranium. I'll do that in another video because you're below the cost curves. You can't go. I mean, it can go lower, but it can't be sustained lower. And I think we already did a large corrective pattern, a multi-decade correction in uranium. So I'm going to do a whole bunch of this type of analysis. You guys can get some entertainment out of it. I don't know if I'd use it 100% to guide you making purchasing decisions because I'm so new at it. But I think this is right. This is kind of how I look at it. It is very difficult to know where you're at. Because you can blow this thing up infinitely. You can go infinitely downward and you can go infinitely outward. And it gets difficult to recognize exactly where you're at. You become disoriented very quickly. So that's my only problem with this type of analysis. One of the things is when you're in corrective phases, you can basically contain it with chart patterns. In an impulse move, it's a breakout move that continues to move up. So you can tie in other analysis here, and if you tie that in, you don't have those phases where it's a correction. I didn't violate any of those conditions. So I think it's right. Fingers crossed, because remember, I'm new at doing this. If you guys like this type of analysis, give me a thumbs up. Click the subscribe button if you haven't. I don't know what you're waiting for. Ride this bull market up with us. I am very certain that it's happening using ratios. I've used that for a long time, and they really haven't guided me in the wrong direction. So I'm really using that. And again, that they don't give you time frames. That's the only thing. This could take a good 2, 3, 4, 5, 10 years to play out, or even longer. But I'm fine with that. That meets my time horizon where I would like to retire and where I think the investments are going to work for me. Thanks for listening. This is Finding Value.